JCP, and JCP also is a very interesting trade just because of the market environment that we are in at the time of the trade. So the long-term trend for the market is up, intermediate trend is up, and then we have the short-term rotation of buys from mostly up to small consolidations and small reactions. And this trade is interesting also because it also, as an Under Armour, has that quality of the industry group that is failing, that is weaker, that is in a relative underperformance, and the stock itself is in the downward bias, and yet the trade is not in the direction of that bias. So we're going opposite the market environment that was created by the market, that was given to us by the market. My logic here with the analysis was that we are observing a definitive climactic action. There is a short-term oversold condition where the price overshoots the support line that was actually quite respected at the previous times. We've seen that there is some kind of demand that's coming in at this point. We don't necessarily know whether this demand comes from relatively weak hands or relatively strong hands at the time. With the stock like this, you don't necessarily want to play the bounce. You want to understand that maybe you should go through some testing action and then place the bounce out of that spot. And there are quite a few tests that we see here in this formation on the background of the diminishing supply. And this final test in the potential phase C suggests that we're going to have the rally. Our target is very simplistic here. We just want to see if the price could reach the long-term resistance line and go into the area where original selling has taken on the final capitulation into the climax. And the move is relatively quick, relatively favorable to us. We don't see urgency of the demand coming in, so that suggests that there is not a lot of strength behind this move. Also into the area of the resistance, we're just expecting that it's going to fail. It probably produces a short-term overbought condition, and out of that, we would be expecting the continuation of the major trend, which is to the downside. So we just basically opening at the correct place on the first bar where the change of character shows itself after the test. So that was a really good entry. And then we are exiting right on the first bar that shows that change of character again. So in terms of the trade execution, this was probably, somewhat perfect. But in terms of the overall selection, the best trade was not this one. And here is kind of like my hesitation, to proclaim this a really good trade, is that the best trade came after that. If we are looking at this selection from the perspective of the actual trend that is happening, that is unfolding in this stock and in this industry group, we would be expecting that earnings are going to bring, a change back in sentiment to bearishness just because of the overall trend. And this is where, after the failure at the resistance level, at this short-term overbought condition, we might have an acceleration to the downside, to the area of the support. And that's exactly what happens. So from that perspective, it kind of a little bit upsetting that we did not necessarily did that type of analysis and continued with that trade.